Are you planning to retire early but worried about health insurance? If so, you're not alone. Health insurance is a major concern if you are planning to retire before Medicare kicks in at 65. I had the same concerns when I retired early. Hi, I'm Ellen. Welcome to my channel where I share my experiences with retiring early. In this video, I'll guide you through the best health insurance options for early retirees so you can retire and not have to worry about health insurance. This is based on my experiences navigating early retirement over the last several years. Plus, stay tuned for a special tip on how to save thousands on your health care. So let's get to it. The first option, the Consolidated Omnibus Budget Reconciliation Act, or that's a mouthful, or COBRA. COBRA allows you to continue your employer's health insurance for up to 18 months after leaving your job. It's a convenient option because you can keep your existing coverage, including your doctors and prescriptions, without any changes. However, there are some significant downsides to consider. First, COBRA is expensive. You will be responsible for paying the entire premium yourself, including the portion your employer used to cover, plus a 2% administrative fee. For many, this can be a financial burden. When I retired, my COBRA premiums were about $1,200 a month for my wife and I. That's a steep cost, especially if you're trying to manage your retirement savings carefully. Despite the cost, COBRA can be a good short-term solution while you explore other health insurance options. It's particularly useful if you have ongoing medical treatments or need to maintain a specific coverage for a short period. However, remember the 18th month limit and start planning for what comes next as soon as possible. In my experience, transitioning to an ACA plan when the COBRA coverage ran out helped me avoid any gaps in coverage. More on that later. The second option is private health insurance plans. These plans can be purchased directly from insurance companies or through insurance brokers. One of the benefits of private insurance is there are lots of plan options available, and these can be tailored to fit your specific needs and your preferences. However, private health insurance plans tend to be more expensive than something you can get through the ACA because they do not offer subsidies. When I was exploring private insurance options, I found that the premiums were significantly higher than my COBRA coverage or through the ACA marketplace. Several years ago when I was checking, the premiums were over $2,000 a month with high deductibles and high max out-of-pocket costs for two healthy adults. However, with the private health insurance, the coverage options are sometimes more flexible, which might be beneficial depending on your healthcare needs. If you choose to go the private healthcare route, you must compare different private insurance plans carefully. Look at the premiums, deductibles, co-payments, and the networks of doctors and hospitals. Some private plans may offer additional benefits such as wellness programs or discounts on health services, which can add value despite the higher cost. Just do a comprehensive comparison to understand the trade-offs and make an informed decision that balances the cost against the coverage. HealthShare plans are not traditional insurance but can be an affordable alternative. These plans involve sharing healthcare costs with a community of members who share similar values. What this means is that everyone in the pool puts in enough money to cover the month's healthcare costs for members. When you go to the doctor, you just pay for the bill and then work with your group to get reimbursed. And many doctors will allow you to get a discount if you pay with cash, so you can save money that way as well. While HealthShare plans can offer lower premiums, they come with limitations and risks. For instance, many HealthShare plans do not offer pre-existing conditions, and new members might have to wait several months or even a year before certain coverages kick in. When I was considering HealthShare plans, I found that the lower cost was appealing, but I didn't like the restrictions. You must read the fine print and understand what is and isn't covered. For example, you may have to submit a statement of faith and agree to certain lifestyle choices, which might not suit everyone. I had a friend in one of these plans. Whenever they reported any healthcare costs, the call started with a prayer and faith affirmation, and this may not be for you. Also, HealthShare plans are not regulated like traditional insurance, so there's a higher risk of unexpected costs and limited consumer protections. The next option I'm going to discuss might seem obvious. If you are married, you may be able to get on your spouse's health insurance. but your spouse has to be working for it to be an option. But it might be a cost-effective solution, so check it out. My wife used this option when she retired a few years before I did. I was able to cover her on my insurance plan, but once I retired, I didn't have the option, so we had to go another route. Another option you might consider is getting a part-time job, a job with employer-sponsored health insurance. Companies like Starbucks and Amazon offer health benefits to part-time employees. This might help bridge the gap until you qualify for Medicare. Usually, for these jobs, you must work a minimum number of hours to qualify. For each of the companies I mentioned, it's 20 hours per week. Be sure to understand any qualifications before you apply. And working part-time has a double benefit. It not only can provide health insurance, but it can also supplement your early retirement income. This can be particularly beneficial because you will need to draw less from your pre-retirement savings, allowing your investments to grow. This can make early retirement more sustainable. I originally thought I might go down this path. I thought I wanted to work a bit longer, but the more I applied for jobs, the more I realized that I was done with office life. I also didn't think I'd be happy as a barista, so this really wasn't an option for me. And honestly, I didn't want to work for anyone ever again. But this might work for you. What if you're considering moving abroad? What are you going to do for health insurance? ExPat or foreign insurance provides international health coverage. These plans are tailored for expatriates and often offer comprehensive coverage at competitive rates. This could be an excellent option if you're planning to retire to another country. When I was researching expat insurance, I found that many plans offer coverage comparable to or even better than domestic plans. The premiums were often lower, and the coverage was more extensive, including emergency evacuation and repatriation. If you're planning to retire abroad, expat insurance can provide peace of mind and significant cost savings. Even though we talk all the time about moving back to a tropical country, we decided to stay in the States, so we didn't need this option. The last option I want to discuss I left for last, as it is the one that we are currently using, Obamacare, the Affordable Care Act. The ACA marketplace offers individual and family health insurance plans that are more affordable than COBRA or private insurance. One of the biggest advantages of the ACA plans is the availability of subsidies, which can significantly reduce your monthly premiums based on your income. When I transitioned from COBRA to an ACA plan, I found that my premiums were reduced a lot, like 90%, thanks to these subsidies. You may be able to get your premiums much lower than you are used to paying, depending on your income and your previous premiums. You can explore ACA plans through healthcare.gov. The marketplace provides a variety of plans with different levels of coverage from bronze to platinum. Bronze plans have lower premiums but higher out-of-pocket costs, while platinum plans have higher premiums but lower out-of-pocket costs. Silver plans are kind of in between the other two, with more reasonable premiums and out-of-pocket cost. The silver plans are the ones available for the subsidies. Just consider your healthcare needs and budget when selecting a plan. Be sure to enroll during the open enrollment period or within 60 days of losing your job-based coverage. One tip to save on premiums is to estimate your income carefully. Subsidies are based on your projected annual income, so if you keep your income within certain limits, you can maximize your savings. In my case, careful planning and maintaining a modest income allowed us to qualify for substantial subsidies, saving us thousands of dollars a year. Our income comes from selling our investments, and our taxable income is based on the capital gains minus any losses that we may have incurred. So to balance this and to stay within our estimated income, we just take tax loss harvesting, as I mentioned in a previous video, against the capital gains to balance that income. I naturally question everything, so when we used an insurance broker to help us with selecting insurance, I double-checked all the options he gave us. One year, I was able to find a better option than the one he found just by doing a quick comparison. And by finding a plan with a slightly higher deductible, I got better coverage with lower premiums and out-of-pocket costs. I figured out this was a better option by doing a few minor calculations. Well, let me show you what I mean. As you can see, these four plans were the ones that my insurance broker gathered up for us. Each of these has, monthly premium about $200 to $300 and $0 to a very low family deductible. And here's the plan that I found. I found this one had a much lower monthly premium, but the annual family deductible was higher. So what I did to compare these was I took the monthly premium, I multiplied it by 12 to give you the annual premium, and then I added the family deductible to that, and that would give you your annual cost if you used enough health care up to the family deductible. As you can see, the one that I found was much cheaper annually than the one that the insurance broker found. So just when you're comparing plans, make sure that you're looking at all aspects, not just, the monthly premium or the annual deductible. You want to put them all together. And this also doesn't include the other comparisons that I made, which were the co-payments, which doctors were included, and how much coverage was for certain circumstances like ER visits, etc. This was just comparing monthly premiums to the family deductible. One thing to note, the ACA subsidies are not based on your net worth. Just like income tax, they are based on your income, not your assets. You estimate your income for the next year, and then your premiums for that year are based on your income. At tax time, you reconcile your actual income with your estimated income and then pay back some of the subsidies you received if you exceed the estimated income. And you can use this in your favor. Because these subsidies are not based on your net worth, you do not need to look poor on paper, as I have heard others describe it. Just estimate your income, keep your actual income close to that number, and reconcile when you do taxes. One trick I found is that if you estimate slightly lower than your actual income, you may get a better plan than if you estimate higher. The deductible and max out-of-pocket costs go up with a higher estimated income. So estimate lower, get lower premiums, deductible, and max out-of-pocket cost, and then when you reconcile at tax time, you just repay the difference between the premiums for the lower estimate and the actual income. So there's my top 7 options for getting health insurance during early retirement. Navigating health insurance as an early retiree can be complex, but with these options, you can find a solution that fits your budget. Plan ahead and choose the best fit for your circumstances. Do you have any questions about health insurance during early retirement? Share them in the comments below. What are your experience with it? Have you had any problems with it? Put it in the comments below and let's discuss this. And that's it for this video. Until next time.